Hey forex traders, I told ya, yeah, I told you all about this Euro USD, GBP USD, like the majors, my views on majors. The last time that was in 2 videos ago, 2 videos back. Sorry, yeah. So I'm still, sticking to this analysis, even though on AUD USD I had the bias that I dropped yesterday. Is it yesterday or midnight? Like I dropped it recently that okay, I'm anticipating that okay, this bad boy should go AUD USD. I'm anticipating that okay, it goes up from here and then drop down to maybe this level, and that's that for AUD USD. Weekly pretty much still doing good. But then, if this didn't go up right straight up, if it didn't go up straight up, right, I'll be looking for, if it didn't get here and then, maybe just broke down like this, then the bias is going to change from that previous up then down uh to me trying to find a buy, a long buy at the low. Like if it just as it's coming down here, if it just comes down, clear this low, I'll be finding a POI where I could just buy up. Yeah, so that's that for AUD But majorly what I'm here to discuss with you today, this very moment, is about this Euro USD there in respect to what DXY is saying. DXY is, I said it the last time that I'm gonna be looking for, this low to either get stuck or see something like this happen. Something like it's either something like this happen. We go from here to tap this, my yellow line, and then maybe price will just retrace from them. But anything that makes us violate this low, it means maybe we just, go bleed, or the price will just bleed all the way down. That's the anticipation for this. But as it is right now, looking at the DXY, essentially DXY is telling me that, man, boy, look at this that happened in the past is what's about repeating itself right now. And DSY, we forex trader, we don't trade it. That's the dollar index. We don't trade it in most cases, but we use it to gauge, to mirror our analysis and how we do trading on Euro USD, because majorly the Euro USD is the most um inverted correlated invertly correlated pair to the DXY. That means it's the pair that is correlated to the DXY. The Euro USD is the pair that is correlated to the pair DXY indirectly. Like the reverse side of DXY is Euro USD. That's the point. So as I'm seeing here, I mapped out this other block here the last time, where I'm saying okay, this other block retraced price in the past. And I was talking about how in one of my videos last month, I was talking about how one could even call this head and shoulder and then find a good reason to buy up and assume that okay, maybe it's just gonna keep going up. Why the market remains the market, it always does what we do. Yeah, but I believe that there are certain indications that gives us, because this market is it's so complicated that sometimes, not most of the time, that's why most of your job, sometimes most job as a forex trader is patience, holding on, and just waiting is your duty. Like it's your decisions, as is a trading decision for you. It's only a newbie or someone that is not so exposed to this space that we see waiting as you are just wasting. You get? So waiting here is not wasting. It's you are not just because when you while you are waiting, you are not just waiting. You are anticipating because most of the time that the market swing, that the market trend, that the market really trend is like let's say 20% of the time. So what happened during the rest 80%? The market is just doing up and down. Is giving people gas goes in the market and then liquidating retail traders. And then as a professional, you want to really, really observe. You don't want to just chuck your money into somewhere that you can't pick it up from. As it stand, back to talk on DXY, as it stand, this very I don't know if I should put one maybe I should put something there. Let me put love. Hey, I love love. Yeah, this is a big love, more than I asked for. Okay, I want to reduce this. How do I reduce this? How do I reduce this? Okay, look at this. Let's make things funny here. The other block in the love. Come on, do I have to be doing this? This is supposed to be a professional forex analysis video, man. Come on, Lome Banks. Anyways, yeah, the other block in the love is it's at a very key zone. And love, we have most of our good memories are memories of love, of course, so put it there as memory. This other block is a memory because it has been there and I've really been anticipating that okay, whatsoever happen around here, right? I want to see how market is going to break through it, or market is going to react to it, and then it's going to resist price, or maybe in future supports price. That's when it supports price is when I see other things that co-align with it, like um this very resistance that happened here. If market should, like as it is now, maybe market blow out up to the upside, break this high, and then the market just come and you know retest it, as we call it mitigation block. So retesting this zone right here, this zone, as mitigation block, and it's also co-aligned with this other block here, which is supposed to be a bearish, which is actually a bearish order block. So market could just, it could co-align and then we go up. But as it is, for a long while I've been looking at a down market. This market has been trickish, and for the most part, most of the time I've been waiting. I've just been watching. I've not really been doing retrading. Yeah, and it's a new month now. It's time. It's an interesting time to just pay attention, close attention to this zone, this very zone that I'm drawing out. This is too big. It's too wide. Okay, let me increase the candlesticks. But you can see from the bar on the monthly time frame, the bar of September, yeah, September 2022, actually. See this very to the current date. I see what is happening on the monthly, and I'm like, man, markets, this very candlestick on the monthly time frame, that's November 2022. You see how it engulfs the previous two candles, like engulfs it totally, and then with such impulse it moves to the downside, and then market is retraced from, I don't know if it's 50%, if it's up to 50% of the Fibonacci, using the body first, using the body of the candle first. Of course, this is monthly. I am going to be using the I am going to be using the week. Yeah, but first using the body. Just around the 50% of the Fibonacci is where the market first drop down. Drop down a good deal for 2 months, and then we back up. Takes how many months? 4 months to get to, almost the starting point of the previous drops on the monthly time frame. And then if you're looking at the week, like we are picking the week, this is monthly time frame. On lower time frame like daily, based on how I view the market, it's dynamic. You can do it your way. Anyone that has worked for you or that usually work for you. Yeah, nothing is set in stone here. Actually, this is forex market. You can actually be, is not. You are not supposed to be sticky. Just explore. Do what fits you. It's not a one size fits all market. There are plenty approaches to making money here. Yeah, as well as losing money. Because approach can lose money too, obviously. So using the week is still around the 50% of the Fibonacci level that this guy drops. So it would have been better if it moves a bit higher. Why? Because I'm sure there will be on the weekly time frame. It's not actually that it would have been better. The very place that the market dropped now is even actually a key point, because if we are if it had been here, let me put this, let me look for a bar. Okay, let me use this. If the market had dropped around here, though, for me, I would have, from a 70% probability, I would have been like holding is 80% um probability for this down move, because it's happening at a very, very premium level in the market. Premium level, you know what I mean. If you know market PD array, you know what premium and discount levels of the market is. So if the market had gotten here, like if it had happened like this, that it goes straight up here and then come down and then it's doing this, then I'm very sure that okay, this place, we actually be checking for POIs here. POIs is point of interest, in case you don't know. So, and any POIs that is valid here that I see reaction, I'm going to be shorting from there. At least target one will be this zone. This is 100.00 zone. So that is what I would have done if the market had reached here, which I classify as premium area of the market, of this DXY market. But as it is, it didn't get there. Looking at the weekly, as it didn't get there. Looking at the weekly, it's still saying something cool in the sense, in terms of the other block here. We use fair value gap. I really love fair value gap because uh fair value gap are things that I learned about it and I've used it. It really works well. So if the market had entered this fair value gap, like this place, if it had filled the fair value gap, I would have had more confidence than I have now in this current trade, like in the downward trade. So yeah, so as it is now, what am I looking for is, as we are seeing it right here, we see rangings on the weekly time frame around this place, and I'm anticipating that this range is mimic or replicated around here too. This is a ranging of 1 2 3 4 a month. That's 4 weeks right there, 4 trading weeks actually. And then it's happening here again. This week is NFP week, so I won't be trading either, because a lot of ups and downs catch up can happen, as well as overnight profit in the market. So I'm not looking for quick bucks. I'm looking for my strategy tallies with what the market is saying, and looking for a very good entry. I'm a conservative trader, by the way, and I don't rush into trade or rush and just just gamble, or when I'm not very sure I don't enter. I could take a month watching the market. I'm a swing trader, and I love it that way, because at the end of the day I have to be very sure before I take a trade, and I'm seeking high probability alone. And you know what happens if such trades play out, you get. So that's my own approach to the forex market. This other block is valid for me. Map it out on your chart too, and watch out for what is to happen around it. So the point I'm trying to convey here is that this very zone, I am anticipating that, okay, there is, as there was ranging last week and upper week, the ranging means this let me put this line. So you're gonna watch it on the daily time frame. You're gonna view it now and delete this. Okay, this is the ranging that is been happening. This is like most part of 3 weeks now. This is the third week this has been ranging. If you look at it, this is it on the daily time frame, and on the 4 hours time frame, let's see how it looks. Let's view it together, how it looks on the 4 hours. My network is kind of crazy. Okay, this is it on the 4 hours. You see that here, unless you are a scalper or you are just looking to catch some few pips, that's when you will be entering this market. You will be doing in and out, and that's not even my approach and or my style of trading. I don't trade that way. So this is a range bound market. It's not making sense at all right now. And on the weekly, it gives me that clear view of, okay, this is the most part of 3 weeks, and then the third week is what is happening right now. And then I want to see how this week, so this week that is NFP week, I want to see how it closes around this other block in respect to how this very one close here. So that is mostly my anticipation for the dollar index. And should I get a sell entry? Mostly I'm looking for a sell entry. Yeah, for that. Of course, that is the reason for calling this other block in the first place. I'm looking at this other block resist price to the downside. So let me just, in short, put my triangle arrow, sorry. So on the weekly, this is what I'm anticipating. This is what I'm anticipating in essence. Why I put this there is based on what a lower time frame bias, a lower time frame is saying. I check a stool like a I see some how do I put it, formation on the lower time frame, and that's why I put the small purple line, and I'll be checking back on that later to see how price react to that side also, if we have a sell value sell bias, because that very point, let me show you on the daily time frame here, that very point could be a sell area, like a sell, a continuation for the sell if we eventually start. So that is it. This DXY, we are not trading it, but if it's forming around here, if we call it a valid area where, you know, sell entry could happen, then it is going to mean that Euro USD 2, on the other hand, should be preparing to sell around where it is currently. That means essentially, like, contrary to what I was expecting before, I won't be expecting, I won't be really expecting that the the Euro USD fall below where it is, or to this yellow line, before I look for my buy entry. Because if I'm looking for a sell on DXY, I'm looking for a buy on Euro USD. So looking at it this way, the price could just range, all the ranging could just be maybe around here, just around this 3 weeks, the current 3 weeks. Yeah, it could just be around it and not get to this yellow level, which I map out as a support zone. So if that will happen, I will be looking for my buy on the daily time frame. It's not clear, it's not crystal clear right now, though it won't be always crystal clear, but I need some confirmation for the buy, and that is why I am I am essentially waiting for NFP to be over. So next week is when I'll be checking this market again, but this is just an update on how it's going currently and what is the anticipation from Lumi Banks here. Until next time, I wish you good luck and good trading. Lumi Banks sign out.